Hey traders, Raghee here. Let's get a quick audio and video check in our training room. Great to see everyone on Facebook, on our YouTube and Twitter. Happy Friday, everybody. All right, so we're wrapping up the end of the week. A pretty uneventful one so far if you take a look at it from the perspective of the S&P. If we just take a look at the week, this big candle up was Friday. And then this is the week so far. And if you look at the high-low range from Wednesday, we are just pretty much stuck in that. So the way I'm going to look at this week is pretty much through that lens and just sort of that highlighted area where smack dab in the middle, if I take a look at least this quarter, right? Starting with right there, April, okay? But look at this quarter. That's the point of control for the quarter, gang. So this is April and then about halfway now into May. And that's the most volume that we have seen since the end of Q1, or another way of looking at it, that's where the volume sits here in Q2. Where volume sits, attention, opinion, commitment, etc. So we'll be looking to see if there is a minor victory for the bulls, for demand, for buyers. It's going to be north of 4140. So the question I've been getting a lot of is, what are the two zones? What's the zone to the upside? What's the zone to the downside in terms of where we go next? All right, forget which direction we go next. Think about what those zones are first. And for now, I'm going to focus on likely either this area to the top. That's our volatility area. That's going to update every day because each day, Wednesday versus Thursday versus Friday, brings a slightly different volatility, but it'll be in that area. The other thing I can do, and notice all of this is automated. The next thing I can do is use our Darvis, right? So there's my Darvis resistance. Here is my Darvis support. Notice that everything on this chart, as much as I possibly can with accuracy and testing, is automated. So those are my two ranges, about 4062 and about 4200 to the upside. As long as we remain above the point of control, my expectation is for more upside. If we start to slip below that point of control, my expectation is going to be for the downside. So keep an eye on that line in the sand. That point of control is going to be a really important one. And that's been a question I've been getting quite a bit. Rog, where do we go next? So let's look at it incrementally. Who, buyers versus sellers, have the edge? And then we can look at a little bit more clarity from the standpoint of that point of control level. All right, so that's kind of what's on my mind here this morning. Kicking it off, looking at the S&P. It's going to be a slightly different opinion on the NASDAQ, right? Despite Disney's sell-off, and Disney would affect the NAS by way of its weighting. Diz is weighting in the XLC. Even the XLC shook this off, right? So it's hard for me to get too concerned about what happened with Disney. Clearly, the NASDAQ is not. XLC is not. And when we look at the NAS, it's a whole lot easier to say the path of least resistance is to the upside. In fact, if we were to sell off, look at the point of control and then look at the volatility support. They're right there complementing each other. So a pullback to that zone in the NASDAQ is going to be far more bullish. And I don't have a bearish outlook on the NAS at all. Will we get pullbacks? I sure hope so, because it's pullbacks that'll give us an opportunity to either buy at volume ledges, like that green line there, or at the point of control, or the daily price movement range volatility support that waits underneath. And again, I'm anchoring everything at this point from a different kind of view, a more short-term view as to what we are seeing this quarter. All right. Got a request here from our training room. Hey there, Lincoln. Comcast, sure. Let's jump on over there. So Comcast, quite related to NAS when you think about the weighting of this particular stock. Let's take a look at the year. Let's squeeze in the year to start. Go to 2023, where are important levels. And Comcast is in an uptrend. So overall, I'd look to buy the dip. And to do that, On the daily time frame, an easy way to look for those buy the dip opportunities would be to look at Comcast through the lens of the daily with the 34 EMA wave, right? The 34 period exponential moving average on the high, the low, and the close. And that would put me somewhere in the vicinity of about 39 and a quarter, 39.20, being above that 200 bullish. The structure of this particular market, I get this question a lot, Rog. How do you know what the structure is? Are you waiting for things like a 20, 50, 200 period simple moving average? No way. Those are too slow. Those are way too slow. So what I want to do is have a quicker and more accurate way of looking at those transitions from chop to trend. And that's going to be with shorter exponential moving averages. And that's what those two rows of colors at the very bottom of my screen are showing. What we see with the top row is momentum. What we see with the bottom row is the trend. And that's what I'm looking at there. A pullback within the context of an uptrend. That's buy the dip, my friends. So that's what I'd be looking for there. Lincoln Park, thanks for the question. All right, let's get on to the next question coming from our YouTube channel. Stephen asks, please share with me the best time to trade the SPY 0 days to options with 2 and 5 minute time frames, the morning and afternoon, considering other markets and such, the ebb and flow. Thank you. So, Stephen, I know that, look, and I'm not in any way here to say that 0 dated options are not interesting, but in terms of 0 dated option, as when we think about the primary considerations of what's going to get us in and out of a trade, 0 dated options, not even in the top half of my consideration, right? And why do I say that? They're very popular. Obviously, they're lower cost. There's a good amount of volatility instead of SPY. And by the way, kudos for SPY 0 dated. I'm not a big fan of SPX. I think a lot of people are sort of getting into this very trendy thing of SPX 0 dated, and that's cool. But they're sometimes finding out how badly the bite is when you're on the wrong end of it. A little bit more, a little less windshield, a little bit more bug, if you know what I mean. So kudos for the SPY. The only reason I would ever consider, personally, right, the 0 dated is if I'm day trading and if I'm looking to not pay for time. Remember, there's 3 elements to an option. You can pay strike, how far deep in the money, how far out of the money are you in the money, at or out is going to, it's almost like real estate, location, 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 right? So your strike is going to be part of what you pay or collect for the premium. The next part is going to be volatility. How volatile is the market? That's going to elevate the price of the option. It's going to elevate the premium. And lastly is how many days to expiration or weeks. When there's less time to expiration, the option in that particular part of its pricing is less expensive. So it's obviously very appealing to directional debit players like myself, but it's also very appealing to folks who like to write premium because they're not risking the uncertainty of time when they have written an option. So those are some of the things to look at. The best time is whenever during your edge in the morning. My edge in the morning is 9:30 to 10:35. When the underlying, in this case, it's going to be, so we're talking about the SPY options, right? But the way that I'm going to measure what the SPY or even the SPX is going to do is based on the S&P futures. This is the more complete view of what the S&P is doing because it's a nearly 24-hour and pretty much liquid through the entirety of that time contract. So I'm going to look at the SPY through the ES futures. And when the ES futures give me a setup, that's going to set up SPY. That could set up the MES micro. And of course, you could set up the SPX. So what is the best time to trade the S&P? For me, 9:30 to 10:35. In that window, if I have a day trade and I want to go with a 0 dated option, notice how that's down the list, right? The 0 dated option is not the strategy. It's the vehicle by which we take advantage of a setup. And that's a huge difference from what a lot of traders are doing right now, which is prioritizing this 0 dated SPX or the 0 dated SPY and not thinking about, but is there a really good underlying setup in that contract to begin with. So my 2 cents, and that's the way I look at it. Thanks for the question, Steve. And I'm sure a lot of folks have been wondering about that. Donald asks, any thoughts on the 2-day slide in the silver market? Well, first of all, when we take a look at silver right now, silver is a very volatile market. There's no two ways about it. And it's great until it isn't, right? I think we would put on I know personally, I've put on in the last 2 weeks, 2 trades, and I'm 1 for 1, right? And I don't mind to admit it. We have to acknowledge that silver is a pretty volatile contract. That's why I always play it through SLV. I can control risk a whole lot easier through that option on the ETF. However, is silver still buyable? One of the things that I mentioned to our Sector Secrets Mastery folks, Donald, is that a lot of folks ask, can we buy silver as in yesterday's session? I said, no, let's wait for either a minor low or an inside candle. Both of these are price-based patterns, not chart patterns, price patterns. And we are getting the makings of a minor low. The first day, however, that I'll have an opportunity to take advantage of this minor low will be Monday. So my thoughts are it's still a neutral market. It hasn't gone into a downtrend, and uptrends seldom go right into downtrends, right? Even Disney's dramatic fall on the daily time frame, right, hasn't yielded a downtrend, right? It was in chop, it remains in chop, right? So, keep in mind, one day can break a trend, but one day will not make a trend. And if I look at silver, yeah, big down day. I took a paper cut on a very small position yesterday. So, those things are going to happen. Now what I have is an opportunity to possibly get long on Monday based on that minor low, neutral environment, nearly oversold stochastic. Okay. All right. Thanks for the question, Donald. I'm sure a lot of people are wondering what on earth happened with silver. I think when we look at something like this, an overall uptrend and a dramatic move down, 2 things, I think. 1, silver is fairly volatile. 2, a lot of times profit taking can really start to generate momentum to the downside. And that's what it looks like there. It's some profit taking through the 21, through the 21 EMA, through the 25 handle, just started to feed on itself because momentum begets more momentum. All right, next up, one of my only stocks for the next 5 years, PLTR. Okay. I'm convinced about the greatness of this company while getting knowledge in ChatGPT. Cool. I think that, if you're playing a long term, play it on a weekly. That's the way I would look at it. One thing I will say that is favoring PLTR right now, and one thing we want to look out for, and you know what? Let's do this on TradingView. Taking a look at PLTR. And that is, where is the volume? And also, where is the underlying structure? On the weekly time frame, as of February, the middle of February, PLTR broke the downtrend, which is great for buyers, and it went into a neutral environment. So the first step for me, before we can start moving higher, is break the previous bearish trend we have. All right, then we move on to, can we stay neutral around a point of control? Can we hold support at an important volume level? Also, check, we're there too. The last piece of the puzzle is, can PLTR get above the 200 exponential moving average on the weekly? And then when it starts to do that, yeah, we're in good shape. All right, Larry. And again, I have no exposure there, but if you're looking for these incremental steps to higher highs, almost every overall move to the upside is going to be in those incremental steps. A downtrend going neutral, neutral finding volume, and then volume and buying demand propelling price through the 200. All right, Larry says, it appears that gold and silver are diverging on the daily chart. Does this mean something to me? When I look at gold and silver, silver is a funny little character. Very volatile, as I mentioned before. It's a little like copper in that it does have industrial application. There is that copper-ish type personality to silver. And then silver will sometimes move with gold, and gold is a lot more of that inflation sensitive name. It's a lot more geared towards real interest rates or real yield, which is the nominal yield of a bond minus the rate of inflation. So silver will sometimes move for reasons along the lines of copper, economic expansion and optimism, and sometimes with gold, which makes it tricky, right? What makes it a little tricky, because which one is it going to move with? Not unlike the decisions index traders have to make when they're looking at the S&P and asking, are you moving more with the Dow and more with the financials and healthcare, or are you moving more with the NASDAQ and more of that tech personality? So certain stocks, certain commodities, certain indices are going to have a foot in two camps, so to speak, and silver is one of them. So silver really doesn't need to move with gold, although it often does. But I won't look at some sort of sympathetic correlation. And I don't have my correlation chart up right now. But right now, I would say treat gold as an uptrend, treat silver as an oversold neutral market. I'm bullish in both. Right. So does it mean something to me? Not necessarily, Larry. I'll look at silver kind of in its own world. Gold, I'll look at a little bit more with what's happening with bond yields and what's happening with inflation. So 30-year, 10-year CPI releases, PCE releases, those are going to affect my opinion of gold. But at the end of the day, I'm still going to look at the underlying structure of the daily time frame of those symbols. And gold is back to being bullish. This month has brought the bulls back in gold, and it's buy the dip. All right, so is silver in buy the dip mode? No, I would say silver is oversold buy mode. Gold is buy the dip mode. Yes, and the difference comes in, look, gang, all these assessments I'm making, and I know a lot of you have this tool. This comes from a very time-tested, and it's just ridiculously accurate. And that's the multi-trend. What are 4 exponential moving averages doing? And what are they communicating to me about momentum? And what are they communicating to me by trend? And the subtle difference between the two symbols, gold and silver, is that silver just broke its uptrend, very fresh break. But I think a lot of times traders think in a very binary way. Either a market is bullish or it's bearish. And that overlooks a really important fact, which is the market can be in chop. And chop will have either a bullish directional bias or a bearish directional bias. So when we go into chop, like we have in silver, after an uptrend, like we've had, that's bullish chop. I'm looking for an oversold buy. So even though they're in two different structures, market conditions, call it whatever you want, market trends, they're both bullish, but for different reasons. All right, thanks for the question. All right, next up is Jay says, silver and crypto seem to be doing the same thing. I'm sure there's all sorts of correlations. I don't know that there's causation, Jay Trader, but I always try to remember correlations aren't necessarily causation. I don't know if, and maybe there is some connection between silver and crypto. I'm not aware of a steady one, but who knows, right? Who knows? All right, next up is Costco. Hey there, Stephen. I am doing well. I hope you are as well. Costco, daily time frame and neutral environment. I don't have anything clear on Costco. As far as the bullish side, let's use an oversold or retest of say 490 to 480 before we can get long Costco again. Use an oscillator, whatever your favorite oscillator is, to help you identify what a oversold, in other words, a support level would be. My recommendation is going to be use 2 free tools that I've been supplying for years now. Use a 21K slow stochastic and use the Darvis 2.0. Wait for those to sync up. And then there you go, Yahtzee. So that's what I would wait on Costco. And then I would additionally ask myself, if I'm looking at Costco, what's moving with Costco, right? And then I would look at the overall group that Costco tends to move with and ask yourself, is there a rising tide that could help Costco out of the chop and into a trend? If not, remember, we're living in an overbought, oversold world. So when we go from oversold as a buy, which is just oversold, just another way of saying support, and we move to overbought, which is just another way of saying resistance, be quick as far as understanding that could be the end of the ride, right? That's how CHOP works. All right, gang, as always, gosh, that 20 minutes flies on by. Thank you as always for getting those questions in. I just try to get them first come, first serve as always. Fogo asked real quick, can I use grab candles for day trading? Absolutely. I use grab, GRAB, green, red, and blue candles for day trading, for swing trading, and even for my longer term position portfolio. Absolutely. They will never not be on my charts. Thank you so much, gang. As always, enjoy your weekend. I'll see you Sunday for our This Week in the Markets live show. My This Week in the Markets subscribers, the free video, the video that's included with that subscription will be available tonight, and the newest issue of This Week in the Markets will be available on Monday morning. You can check out and get a 7-day trial at this week, a $7 trial for a month at thisweekinthemarkets.com. Sadly, that crazy special that we did, for those of you that locked up on that, fantastic. I don't know when, if ever, we're going to do something like that again. But in the meanwhile, I guess the consolation prize is you can check out a trial. All right, gang, be good to each other. I'll talk with you soon.